Okay, we're back.
Hello. It's been a while, hasn't it?
It has, but it's good to be back.
It's
It's
good
good
to be back.
to be able to share knowledge and have a conversation about protecting wealth from the
Yeah.
family.
Building generational wealth and protecting what you've worked so hard for.
Mhm.
But yeah, we're back, guys. So, topic for today is going to be family investment companies. Now, this topic has kind of been in the air for a while. Um, we've had a few people reach out to us about family investment companies. We've also thought about, potentially doing a workshop on it, but I'll come back to that towards the end of the podcast. But I think it's really important that a lot of people know what a family investment company is. At the end of the day, we do have trusts, but family investment companies can act also as an alternative to trusts.
Mhm.
And there are other structures you can use beside trust that not many people are aware of. So family investment companies are example of that. So just going to ask this really quick, simple, basic question to Richard. What is a family investment company?
That's a good question. Um, just to keep it really simple, it's a regular limited company, just like any other company, but it's structured in a very specific way, particular way, to allow families, especially those with a lot of wealth, to structure their wealth in a way that we can start to mitigate for mainly inheritance tax and create generational wealth for the family. Hence, it's called a family investment company. So you'd have your investments, whether that's property, cash, pensions, loads of things that can go into a company or a pension. Well, say pensions or maybe the cash element of that. Not to get too technical, but ultimately you structure the company and the wealth in such a way that the future generation can benefit, and that the current owners can kind of decide when they want to kind of cap their wealth and start to pass it on and transfer
Hmm.
that to the future generation and mitigate tax as much as possible. Now, it's not for everyone, but it's definitely a solution, especially in line with all of the recent changes that we've seen happening with the budget.
Okay. So what's like an example situation of why somebody would choose the family investment company over a trust?
What we're seeing more and more of are property investors or developers coming to us, even business owners, and they've got large assets. So, 4, 5, 10 million pound, £20 million businesses, whether that's a property portfolio or traditional business. And now that the budget has decided from next year, the government from next year, that we're going to cap, for example, business relief for £1 million per person, then businesses thought and then farmers as well thought, everything's fine, we can claim unlimited relief. Now they can't. So they've got to be a bit more savvy about how they're going to pass that wealth down free of any inheritance tax. And so using a family investment company and allowing, if you've got a decent sized family, allowing them to uh, join the company so that we can start to utilize and be very clever around planning to maximize the amount of wealth that can be protected. Um, so it's normally for those where traditional trusts can be quite limited, uh,
Hmm.
um, both on time and the transfer value you can put in a trust. So we have to always look at everyone's situation because everyone is an individual. Everyone's situation is different. There's no cookie cutter solution to this. It's just a alternative that may work for family members who have a challenge.
Okay.
So typically, the situation is you've got a lot of wealth, either locked up in business, capital, etc., and you want to be able to protect the family and pass it down. Um, if there's relief available, claim it. If not, how can we just get started with transferring and gifting to our loved ones, and doing that in a very efficient way, just like a trust would work, but in a different structure.
Hmm.
So it applies to property owners, as I said, developers, um, traditional business owners as well, and even those offshore. There's so many different variations, so you can't just put it in one bracket. You just got to take everyone's situation as it comes and see if it works for them or not.
You also did mention that with trust, they're quite limited.
Mm.
Whereas with, as you said, it's for people probably with 10 million, 20 million, like estate, like developers.
Yeah.
So does that mean that there is no limit to family? Not to get too technical though.
Yeah.
But is it unlimited with the amount you can put in a family investment company?
Typically, because there's no limit to what you can put in a corporation.
Mm-hmm.
And that's why they're so beneficial. Whereas a trust, once you exceed £325,000, which is not a lot of money for those who have a lot of wealth, then you're going to get taxed at 20% on the difference. And so we've got to ask the question: is it worth it? Yeah, as I said, everyone's situation is different. But with a corporation, there's no limit of what value you can put in there. The challenge really with corporations is there's always an exchange of value. And so when you're exchanging, say, property for shares, you're going to trigger other taxes. And the question is the tax you're going to pay to get the wealth in the company worth it versus the tax you're going to save in terms of potential inheritance tax? And then all the other questions that need to be asked. That's why it's not a cookie cutter solution.
Yeah.
But ultimately, to answer your question, you can put as much as you need to in a corporation.
And just like there are, is it tax benefits or certain types of relief with trusts? Is it the same with family investment companies? Are they quite different?
Even more so with a family investment company. So, for example, trusts have got a very high income tax rate, it's 45%. Corporation tax is not at that amount, depending on obviously the values as they go higher, but ultimately it doesn't start that high. You can be quite clever and sophisticated with a corporation. Trust administration is pretty much quite rigid. So there are lots of benefits using a company at that level rather than a trust.
Okay.
Traditional trust.
And can you use both a trust and a family investment company?
Yeah, potentially. Again, everyone's situation is different. So we've got to look at, it's quite a generic. I'm being quite generic about how they work because they can be very, very detailed. And I don't want to go over everyone's head. And as I said, what might work for one family may not work for another. That's why it's a very loose subject in that respect. So, but ultimately, yes, anyone can utilize it if it works for them.
Okay. So with like your experience, would you see a lot of people go down the route of doing a family investment company, or not many people?
Not really. Traditionally, it was more those who had a lot of wealth, because they're not cheap to set up for starters. You need a very sophisticated team who know what they're doing. So it's not just for anyone, because to set them up, it may not be cost effective for one person, but be completely cost effective for somebody else. So I sound like a scratch record now. It is not for everyone, but I think more and more people need to know about them as a consideration. It may be an option. So, if you're a farmer with a business, because farmers can claim business relief as well as agricultural property relief, it may work, but it may not. So, but everyone just needs to have a conversation. Our job is to open people's eyes of understanding so they can consider another option. And then explore. And if it works, great. If it doesn't, at least they tried. There may be another solution.
Okay. And also just another question that's popped into mind. With trust, let's say you're the one who set up, you're the one who initiated the trust. You have trustees that basically manage and basically admin whatever's in the trust.
Yeah.
But with family investment companies, I understand the dynamics are quite different, but are you still able to make decisions? Because I know with a trust, you have trustees that made that decision that you assign. But then do you still have that control when it comes to family investment?
Yeah. I mean, basically, a family investment company is like a pseudo trust. It will function just as a trust would. It's just a different structure. So the directors would be the administrators of the company, or the trustees, if you were to equate it. The shareholders will be the beneficiaries. You can assign rights to the shares. So you'd have Class A shares, and they may have different types of rights compared to B, C, D, or E shares. So the same way you can control in the discretionary trust the beneficiaries' use, if they have it or not, because the discretionary trust, they're not automatically benefiting until the trustees kind of select them. You can have a resolution. You've got an agreement, shareholder agreement, to identify the articles and to agitate and just change the articles and memorandums in order to, to get what the resolution for the company in place. So that's what I say. Everything's quite unique and original. But in terms of the trust structure, an FIC is a pseudo trust. It's working as if it were a trust. It's just a
Yeah.
different legal entity.
Okay.
That's the difference, really.
Well, thank you so much. It's really insightful, Richard.
Mm.
So to you who's watching this right now, we'd love to have your input in regards to our workshop idea. So we've just been thinking about it for a while now, having a workshop surrounding family investment companies and alternative structures. We are thinking about mid-March. But we'd just love to kind of gauge the interest, who would be interested in it, if this is something that you would like to learn more about, if
Yeah.
you're a landlord, a business owner, property developer, or if you know someone who would be interested in this type of structure, then please let us know, because we'd really love to have a workshop.
Yeah, we
But
want your feedback.
obviously, yeah, we want your feedback, and a workshop is for you at the end of the day. So we'd love your feedback to know if you're interested. So please feel free to send us an email or maybe leave a comment down in the comment section below. But in regards to prices, we are gauging kind of around £87 as an early bird. So yeah, but
Yeah. It'd
please
be
let
like
us
a
know.
an hour and a half, 2 hour workshop.
Yeah, very in depth,
Um,
very detailed. Like we'll break down how they work, the
yeah.
functions of it, how you could potentially implement it as well. So we'll definitely break down, be more in detail with it in our workshop. But yeah, please let
Sounds
us
like a
know.
plan. We're looking forward to hearing from you. And any questions you may have as well that you want us to address going forward, then please feel free to jot that in the comments as well.
Yes. And if you have any ideas for any future podcasts, please do let us know. As I said, it is for you to serve you as well. So if you would
Definitely.
like to hear anything in the next upcoming weeks, please do let us know.
Fantastic. All right. Is that it?
I
Is that
believe
all we
that's
got?
it.
Nice. All right. Well, thanks everyone. And I'll see you next time. Cheers.